Ideally, it's held at Anchorage. That's the way that we would like to structure it, so that it stays right there in your account. They're building out a SMA structure for us. Fidelity already has that, so if Fidelity would custody XRP, we could facilitate what we're looking to out of their infrastructure. The product that we brought to market with Bitcoin is exactly that. Your Bitcoin sits in the infrastructure there at Fidelity, gets aggregated and reflected without ever moving. With 2 Prime, and then 2 Prime uses that liquidity to then be able to generate additional returns on the Bitcoin. We'd be doing the same thing with the assets, depending on who we partner with. The assets should be able to sit there at Anchorage and then just get reflected off exchange, so that there's no counterparty risk. If somebody else were to go bankrupt, you're not a creditor in that situation. That's our main deal. And then obviously, we want to mitigate volatility risk, because if, God forbid, something happens and XRP goes down substantially, there could be capital called away. We've done really well with that up to this point. On 1010, we had no assets called away. So it was 9 times larger a liquidation than we saw for FTX back in the day. So I'm pretty happy with our counterparties and how we've structured everything, and we'll continue to look to mitigate risk in the same manner on these other products.